In today's video, I'm going to share with you 4 simple things you can do to increase your Social Security spousal benefit. To start, understand that you are eligible for either your own benefit with Social Security, that's based on your own earnings record, or you are eligible for a spousal benefit. Now, where your own benefit is based upon how many quarters you worked and how much you paid into Social Security, your spousal benefit, it does not matter if you didn't pay a dime into Social Security ever. It's entirely based upon your spouse's earnings record, and I'm going to show you what you can do to maximize this. Let's start with a couple basic things that you need to know. First is that in order to be eligible for a spousal benefit, you have to have been married for at least 1 year. So let's say you're 67 years old and you marry someone who's 68 years old, you just got married. You can collect a spousal benefit, but not until you've been married for at least 1 year. Or if you were previously married, as long as you were previously married for at least 10 years to that individual, you can collect a spousal benefit based upon their earnings record. Now there's also a survivor's benefit, and make sure that you stay tuned until the very end because the survivor benefit can tie in very closely to the way that you collect your spousal benefit, and you want to make sure you're maximizing both. So make sure you stay tuned until the end because I'm also going to share with you how you can maximize your survivor benefit. So let's start by talking about what are those benefit amounts. How much are you eligible for if you collect a spousal benefit? Well, the maximum spousal benefit that you can collect is 50% of your spouse's primary insurance amount. What is a primary insurance amount? Well, when you look at your Social Security statement, you have something called your full retirement age. It's anywhere between age 66 and 67 based upon the year in which you were born. That benefit at 66 or 67 or whatever your full retirement age is, that's considered your primary insurance amount. So when you see your primary insurance amount, your spouse and their spousal benefit is based entirely on that. And then vice versa. If you are looking at collecting a spousal benefit, that benefit will be based on your spouse's primary insurance amount. Now, here's why it's really important to understand this. A lot of people get this confused. They know that if you collect your own Social Security benefit later than your full retirement age, you get to take advantage of what are called delayed retirement credits. So say, for example, your age 67 is your full retirement age, and you'd be eligible for $2,000 per month in Social Security at that age. Well, if you don't collect at 67, but instead you wait until 70, every year from 68, 69, 70, you get an 8% simple increase in your Social Security benefit amount. So that $2,000 benefit at age 67 turns into $2,480 benefit if you wait until age 70. People know that, and so they think, okay, cool. My spouse gets half of my benefit, so if I increase my benefit all the way until age 70, shouldn't my spouse be eligible for that? The answer is not quite. Your spouse's spousal benefit is still based upon the $2,000 per month that you are eligible for at your full retirement age. So just understand that the spousal benefits are not eligible for delayed retirement credits. Now, there is a difference here with survivor benefits, which again, I'm going to get to at the very end. So make sure you keep that straight because this is going to help you put the most amount of money in your pocket as you determine your own Social Security strategy. Another thing that you need to know about spousal benefits is that in order for you to collect a spousal benefit, the worker, or your spouse in this case, they must also be collecting their own. Let's assume that my wife and I were both 67, and I wanted to collect a spousal benefit based upon her earnings record. Well, if we're both 67, and she's waiting until age 70 to collect, I cannot collect a spousal benefit today because she hasn't collected yet. I need to wait for her to collect in order for myself to be able to then collect a spousal benefit. So that's something that's very important to know as well. There used to be a rule called file and suspend, where my wife could have filed for her benefits, but then suspended actually taking those benefits until age 70. What that did for me is that by her filing, I could now collect a spousal benefit. That rule has gone away, so now you must file and be collecting your benefits, or your spouse must be, in order for you to collect a spousal benefit. Now here's a very important thing to know that most people don't realize, and this can add several $1,000s to their claiming strategy when done correctly. Now this is going to sound like I'm just repeating myself, but there's a nuance here that's important to understand. 50% of your spouse's primary insurance amount is your max spousal benefit. Now why does that matter? It matters because technically, spousal benefit is the excess benefit between my own earnings record, the benefit I could collect, and that max spousal benefit. Now let me give you an example of what I mean by that. Let's assume that my spouse is eligible for a Social Security benefit of $2,000 per month at her age 67. Well, if I've never worked a day in my life, and I have a $0 Social Security benefit based upon my own earnings record, well, my spousal benefit is $1,000. If I wait until age 67, I could collect half of her $2,000 benefit. But what if I have earned? Let's say I have paid into Social Security, but just not that much. Maybe I stayed home to raise the family, maybe I didn't have work for many years. Whatever the reason was, let's assume that my benefit at age 67 is actually $600 and my wife's benefit is still $2,000. Well, here's what that looks like. When I go to collect a benefit, I'm collecting my $600 and then it's the $400 of excess spousal that I'm adding onto that to get to the full spousal benefit. Why does this matter? Well, this matters because people think that you're either collecting your own or half of your spouse's. The reality is you're collecting your own plus excess spousal. So in this example, I would be collecting $600 of my own benefit plus $400 of excess spousal. Now that might seem irrelevant. That might seem like, okay, who cares what you're calling it? It is what it is. It's still $1,000 of benefit. Not really, because a lot of times one spouse will delay until age 70. So in that example, I could collect my $600 at age 67 and my wife continues to delay her benefit until age 70. And once she then collects her own benefit at age 70, then I can turn on the excess spousal of another $400 per month. Too many people think, oh, I can't collect any spousal until my spouse is collecting. So in that example, I would have waited until age 70 to turn on spousal benefits of $1,000 per month. Instead, I started collecting at age 67. Now, it was only $600 per month while I was collecting my own benefit, but then that excess spousal kicked in at age 70 for the full $1,000 a month. So if you're delaying any collection until age 70, oftentimes you're leaving money on the table. You will want to collect your own benefit in most cases because you're at least getting something until that full spousal benefit kicks in because of that excess spousal amount that's being added on. All right, now real quick, if you have not done so already, make sure you hit that subscribe button. As we release tips and strategies just like this, I want to make sure you receive these so that you can create the most comfortable retirement possible. Let's now talk about reduction in benefits. So what if you are collecting a spousal benefit, but what if you're collecting that before your full retirement age? What does that do? You don't have to wait until your full retirement age to collect a spousal benefit. But every month that you collect before your full retirement age, you're getting a reduction in benefits. The way it works is the 36 months preceding your full retirement age. So if your full retirement age is 67, every month that you collect up until age 64, working backwards here, you're taking an 8.3% annualized reduction in your benefit amount. Now what actually happens is every month you collect prior, you're getting about 0.7% of a reduction in your benefit, but that's about 8.3% per year for every year you collect before your full retirement age. If you go back further than this, so again, we're working backwards from full retirement age, the 36 months leading up to your full retirement age, you're taking about a 0.7% reduction per month. Any years prior to that, or any months prior to that, all the way down to age 62, you're taking a reduced benefit by about 0.42% per month that you collect early prior to that age. So all that to understand, there's all kinds of online calculators that can help you understand this. Just know that you can collect your spousal benefit prior to your full retirement age, but also know there's a reduction in your benefit for doing so. Now, the follow-up question to that is this, and a lot of people ask me this. They'll say, what if I am the primary earner and I have the higher benefit? What if I collect early? Does that impact my spouse's benefit? Here's a question that came in that asked just that. This individual says, I am currently 52 and my wife is 50. My wife is a stay-at-home mother, so will not be eligible for her own individual benefits and will be planning to take the spousal benefit. My primary insurance amount at my full retirement age of 67 is $3,654 per month. But I was planning to begin collecting Social Security at age 62 to reduce the draw from my retirement account. My reduced benefit at age 62 would be $2,540 per month. For the spousal benefit, I understand that my wife's maximum benefit is 50% of my full retirement benefit. However, if I retire prior to my full retirement age, but my wife waits until her full retirement age, would she still be eligible for 50% of my full retirement age benefit, or would she be limited to 50% of my reduced benefit? So what this individual is asking is he says, hey, I know that my wife can collect up to 50% of my primary insurance amount, so my benefit at 67. But if I collect sooner, does that impact what her spousal benefit would be, or is it still based upon my primary insurance amount? The good news is your spouse's benefit, speaking to this individual here, would still be based upon 50% of his primary insurance amount. So in the same way your spouse does not get to take advantage of delayed retirement credits, if you continue delaying Social Security past your full retirement age, your spouse's benefit is still capped at your primary insurance amount. Well, in the same vein, even if you collect your benefits before full retirement age, they still get to collect based upon your primary insurance amount. The only way your spouse's spousal benefit is reduced is if they are collecting early. But if they wait until their full retirement age, it does not matter when you collect, they are eligible for a spousal benefit, which again is 50% of your primary insurance amount. All right, now real quick, I want to highlight survivor benefits because these are different than spousal benefits and enhanced in many ways, and it's important to understand how both of them work so you can really maximize your Social Security claiming strategy. Here's the key thing to know about survivor benefits. Survivor benefits do include delayed retirement credits. So if I'm using myself as an example, if I turn 67 and I'm eligible for Social Security, but I delay my benefit 3 more years to fully maximize that benefit, and I get 3 years of delayed retirement credits, and I pass away before my wife, as long as she is full retirement age or older, she could collect my full benefit amount at that time. So if my benefit at 67 is $2,000 and my benefit at 70 is $2,500, just rounding up a little bit, and I pass away, assuming my wife is age 67 or older, she would get that full $2,500 per month as a survivor benefit, not the $2,000 per month that was my primary insurance amount. So this is crucial to understand because my wife is eligible for a spousal benefit based on that $2,000 per month, which is my primary insurance amount. But as a survivor benefit, assuming she's 67 or older or full retirement age or older, she could collect the entirety of my benefit, which includes those delayed retirement credits. Now, what if I pass away and my wife is not yet full retirement age? Well, there is a reduction in survivor benefits then. So with Social Security benefits, you can claim as soon as age 62. But with survivor benefits, that age is reduced to age 60. So whether you're collecting a survivor benefit based upon a current spouse or your ex-spouse, at age 60, you are eligible to collect that. However, if you do collect at age 60, it doesn't matter if the deceased spouse was 70 or beyond when they collected their own benefit, you are still collecting a reduced benefit if you turn that on at age 60. In fact, if you collect at age 60, your benefit's about 71.5% of what it otherwise would have been if you had waited until your full retirement age to collect. So the bottom line is that for survivor benefits, you are eligible for up to 100% of the deceased spouse's basic benefit amount, but that can be reduced if you're collecting before your full retirement age. And there's all kinds of strategies here, especially when both spouses have a strong earnings record or any earnings record of that matter. Because for the surviving spouse, they can choose to collect a survivor benefit and then later switch over to their own benefit, or vice versa. So there is a high degree of strategy that goes into how do you maximize your own benefit? How do you maximize spousal benefits? How do you maximize survivor benefits? And then how do you tweak things and tweak the strategy to turn one on and then another off when the time is right for the survivor benefits? So in summary, let's talk about how do you maximize Social Security spousal benefits. Number one, determine if a spousal benefit is actually the right thing for you to take. You have to look at your own earnings record, plus spousal, understanding that spousal benefits are capped at 50% of your spouse's primary insurance amount. So know that your benefit is eligible for delayed retirement credits, but spousal isn't. So start by understanding which is best for you based on that. Number two, wait until your full retirement age. If you want the max spousal benefit, you need to wait until your full retirement age to fully collect it. Number three, wait until your spouse is collecting their benefit. You cannot collect a spousal benefit if they are not collecting their own benefit first. Number four, understand that your spousal benefit is actually the combination of your own benefit based upon your own earnings record plus excess spousal that brings you to 50% of your spouse's primary insurance amount. And then finally, number five, understand that maximizing Social Security income is different than maximizing the impact that Social Security can have on your plan. What do I mean by that? What I mean by that is if all you're looking at is Social Security income, you're just looking at it in a vacuum, you're failing to take into account the consideration for taxes, for what about portfolio withdrawals, for opportunity costs, for all these other things that then get impacted based upon your Social Security claiming strategy. For more about what I mean by that, I made this video here where I talk about the Social Security trap of people thinking that age 70 is what's going to maximize their Social Security benefit, and while it might maximize Social Security income, it hurts their overall plan. So take a look at that case study, and I'm going to walk you through how delaying Social Security increases income to the highest possible amount, but actually backfires in terms of the impact it has on the overall plan. Once again, I'm James Knoll, founder of Root Financial, and if you're interested in seeing how we help our clients at Root Financial get the most out of life with their money, be sure to visit us at www.rootfinancialpartners.com.